We have with us Sri Supratim Bandyopadhyay, Chairman PFRDA. Thank you so much, sir, for talking to ET Now. Sir, there is a target by PFRDA of achieving a AUM of 9 lakh crore. So, if we talk about present year, so how much growth is there, and in this market volatility, how is the overall response, or any sort of new guidelines you have given to fund managers?
First of all, thank you, Anurag ji, for calling me on your channel. And so far as the AUM is concerned, assets under management, obviously we don't set a target, but we have some figures obviously in mind that where we can reach by the year end. And it is a factor of two things. One is obviously the contributions, those are coming. What fresh contributions are coming, the flow is very strong. Still we see about 20-21% growth as of first 9 months up till December over previous year, and we hope that will continue. But the second biggest factor is the market conditions, the market volatility, how the asset value will grow. Because of the market volatility, unfortunately it has not grown that much, and what we see up to December maybe about 22.5% kind of growth over on year basis. So if that continues, we are setting our goal is that maybe we'll be crossing 9 lakh crore of asset base by 31st March.
Sir, there are few states which has again gone to old pension scheme. They have withdrawn from NPS. So they are asking for refund of their corpus which been submitted over the years. So what is the response of PFRD on that? And can we see going ahead a midway scheme which is which can be part of both OPS and NPS?
Anurag ji, yes, 3 governments have already given us letter and they have stopped contribution regarding NPS, and they said very clearly that they want to go back to OPS scheme. See, so far as going back to another scheme is concerned, about that we have no comments, because that is their prerogative, what kind of benefits they want to give to their state government employees. But so far as withdrawal of the money, the corpus which is already there for these employees, already accumulated, yes, there our rules do not permit those kind of withdrawal at large. What we can give, because these are all individual accounts ultimately, and so if the individual supply, that all only can be entertained, but these are again going to be premature exits, and provided that employee who is applying has completed 5 years in NPS. Before 5 years, no withdrawal is allowed. And there also the withdrawal percentage will be like only 20% is given back in cash form and 80% is converted to annuity. So these are the norms, these are the existing regulations. Nobody can go beyond those regulations, and we have also written to them on those lines, and it has come out in the media also. The second question that you have said, that whether a defined benefit under defined contribution method is possible. If you look at the possibility, yes, even today also we are doing it. In the case of APY scheme, which is a government guaranteed scheme, there also if you look at the contribution is defined, because each customer coming in a different age bracket for a different pension amount, their contributions are fixed. But at the same time, the pensions are also fixed. Why? Because government is giving an annuity guarantee of 7% and on a certain corpus. So if either the market returns go down, or if the annuity rates go down as it is today, annuity rates are not 7% anymore. The highest annuity service provider, highest rate that the annuity service provider will be paying today at the age of 60 will be close to 6.5%. So these shortfalls will be borne by the government. So that is understood in the scheme. So on the same pattern, if government wants us, we can formulate a scheme and we can give it to them. But here, somebody has to stand a guarantor, like APY, central government is the guarantor. Similarly, who will be the guarantor here? If the states want, they have to be the guarantor, and from time to time on yearly basis we will do the evaluation of the fund, and any shortfall that there is there in the fund from the requirement we will ask them to fulfill that gap, and thereafter that scheme will continue.
So you have said only 3 states had withdrawn, but there are other states also they have announced. So they are still contributing, state like Punjab that they have announced, but they are still contributing to NPS?
They have not given us any letter, and unless official letters are written, we normally will not acknowledge that. And as per my understanding, I believe the contributions are coming. So that is the state of affairs. But from other states, apart from these 3, we have not received any letters so far.
Sir, we've been hearing from last few years about the minimum guarantee scheme will be launched. So what is the latest progress on minimum guarantee scheme, and what kind of assurance you will give in that minimum guarantee scheme?
See, the latest development is that it has gone to the board in the recently concluded board. We are waiting for the board approval. Once the board approval comes, you will see a notification coming out, and post that the systems will be developed, because it is a different scheme altogether, and the existing systems of CRA, pension fund managers, that may not work. So that's why what we are telling, that the system development also will take 3-4 months. So within a 4-month period post the board approval, I believe safely we can say it will be launched. And the kind of guarantee that we are assuring, it is benchmarked to 10-year government security, because that is something which is market related, well understood, and it will be linked to that government security, and it will be little less than that. What is that? That after board approval again we'll be able to tell you. It will be benchmarked to that. And when a contribution is given and a certain percentage is guaranteed on that contribution, that guarantee will continue for 10 years. But every year otherwise we'll review the rate that is guaranteed from PFRDA with the help of an expert committee, and if we feel that the rates are to be taken little up or down, that we will be doing looking at the market conditions, because the GSEC 10-year may not remain at one level, and it has moved very widely. There are wide swings in GSEC this thing also, market also over last 1 year that we have seen. So if we feel that after 1 year it needs some moderation, it will be moderated, and whatever contribution comes from that period will have that guarantee. So that kind of scheme we have thought of, so that we can keep people interested also, and at the same time it is a workable scheme.
So last year you have allowed companies to fund houses to invest in IPOs also, but we have seen that so much of volatility, most of the IPOs have not performed up to the mark. So is there any change in rules for fund houses to invest in IPOs?
From our side, we have given some broad guideline that IPOs, FPOs, these are all allowed. But IPOs, only one condition, very important condition that we have said, is that post listing, the market cap should be in the range of top 200 stocks in the equity market. So that will ensure they only go for companies which are almost in the large cap category. So that is what we have ensured. Otherwise, any small time IPOs also, if they invest, there is always a possibility that the chances of loss is higher. And after that, we told that you have your own board approved guidelines for IPOs. Some people have already invested, I understand, and some people have played the role of even anchor investor, because they are qualified institutional investors, so they have played the role of anchor investors. I don't have the data that whatever IPO they have invested in, how it has performed, but we have allowed them with these broad guidelines, and they are now allowed to go for IPOs.
My last question, sir, budget is coming next month. So what are your expectations, or what you have written to government as a regulator to be inculcated in budget?
Basically, what we have highlighted is that some parity, or not so much of parity, but maybe some kind of a clarity in some of the guidelines, like Tier 2. We have an optional Tier 2 where people come and there are no lock-in periods, so you can come and go at any point of time, and it gives good return also, market-related return. So there, that clarity as to tax treatment on closing the account, how the capital gains will be treated, it is not given. So like mutual funds, what they have given a clarity on long-term and short-term capital gains, that we have told them that you bring it in. If you can give that clarity, that will help. Already in central and state government sector, the employer contribution up to 14% is tax exempt in the hands of the employees, but this is not extended to other sectors. So again, we said that if the same parity can be given to other sectors, say corporate sector employees or people who are coming not from a corporate sector but they are self-employed, so for them also, instead of 20% of the gross income, 24% of the gross income can be allowed as income tax benefit. So these things basically we have said. We have of course requested them to, if possible, increase the exemption limit under 80 CCD 1B from 50 to 1000 to 1 lakh. But that is an exclusive benefit already given to us. So I really do not know how far that will be possible. But to a great extent, sometimes these income tax benefits motivates people at least to think about pension, and which is a need of the hour, which we have discussed at length on many forums because of the longevity and other things. So hopefully some of these our requests will be considered, and let us see how it comes.
Thank you so much, sir. It was pleasure talking to you.
Thank you.